Welcome back, everybody. Hopefully, all doing good. So today, I just want to take a quick overview of price action and cover the setup yesterday that I saw. Go through that. First, I want to take a look at the calendar here. So let's switch to that. So there's your calendar. We had core CPI yesterday at 8:30, and today we have PPI, and Thursday we have core retail sales, and not much Friday. Neither do we have much on Monday. So those are the upcoming events. CPI, core CPI, core PPI, and then retail sales. Nothing that's going to be crazy, but these are all volatility injections, which could lead to a move. So we look at the US 100 here yesterday. This is pretty much the levels. These were the levels that I was looking at. I was looking at this high, this low that we already traded through, this high up here. Okay, I didn't really like this low. Reason being US 500, same low, and see, we didn't take it out at 7 o'clock, which we did on the US 100. So I didn't like that. 8 a.m. here, we opened up, took out this low, immediately closed back above, but I wouldn't take that as a long either because of the fact that we already took out this low 7-ish and then it traded up higher. So I wouldn't take that as a long either, considering the price action I see here. But at 9 a.m., clearly taking the high, right? Same thing here. This one already, US 500 already took the high at 8. Started tanking at 9. So 6 sister approach. US 500 was heavy. NQ was following behind and took out its high. As soon as it did that, as soon as it closed lower, model is simple. In the next candle, we go in to a lower time frame, hunting for potential short setups. Since we also got that nice move down on NQ, which sort of already gives us a confirmation that, okay, this thing's really heavy. And pretty much the same thing was happening on US 500. And dollar index was very sloppily trading up higher. So everything was looking good. If you move down into a 5, let's go ahead and scrub this back over here. Let's go ahead and zoom in. And let me just quickly do the same thing on US 500. So what's happened on US 100? We took out the high, traded down, 950, 950 macro coming in, trading lower. Basically opening down here. The first thing I see is the breaker block, and then the up close candle, which is the order block. So those are the two levels that I'm looking at in here. My main focus was on the breaker block. That's what I was looking for. And then that allows me to frame the setup, okay? Same stuff as usual. Okay, take profit 0.22%, stop loss 0.14%. It doesn't quite factor in the order block. If you look at an entry over here, okay? But good enough to give the trade room to pan out and do what it needs to do. So let's quickly jump to the US 500. Looking at the same piece of price action, first thing that jumps out here is fair value gap. Okay, nice fair value gap here. Inversion. Pull it through. You pull it through, or you have two overlapping fair value gaps. You would do that. Okay, the smallest one. Okay, so smallest one. So you look at which one's the smallest one, which would be this one. Fits inside it, this one. As soon as it trades into it like this, it becomes a balanced price range. Okay, that's a balanced price range. Reason being, it traded up. It also traded down through that same area of price. So price has been traded efficient in this area because we had them buying it up. Okay, buy side was offered, and when it traded lower through the same level of price, okay, through these same prices, sell side was offered in the same piece of price. So that price is balanced. Okay, BPR, if you want to learn more about the BPR, then you can go and find all of that on ICT's channel, on Inner Circle Trader. You can find out all of it on his YouTube, where he goes in depth and he explains exactly how the concept works. So trades back into that level. These three up close candles could act as a order block. Traded it here. Okay, consecutive up close candles, order block. Okay. My main focus is on the BPR. First thing I saw when I looked at this was the fair value gap. Look at the time, 9:40, 9:45. It's the start of the macro, 9:50 to 10:10. Trades into that, runs lower. We'll take a look at the hourly chart. Way too clean. Equal lows. Okay, that would be the target. Then down here, fair value gap. Fair value gap and low, high, lower low, breaker block. Extend it. Okay, that's where it trades to. Fair value gap. You could also use this inversion here. Okay, that could be, those could be targets. Either one of these are perfectly fine. Whichever one you prefer. Doesn't matter. It's up to your personal preference. Okay? But I was looking at this equal low at the time as a draw on liquidity. And what I liked, okay, what made the setup look even better, okay, what gave it that higher probability, which gave it more conviction, you could say, was the fact that we left those equal lows in place. And we retraced up. Second entry, retracement entry off of an order block. Okay, order block, traded to that low. Okay, that's something that I saw. Now, 940, okay, 940 US 100 traded into that balanced price range. 940, we took the high on NQ. Okay, we took the high 940. So you can see we already had the high taken out and we were starting to tank down lower on ES. So it's leading price lower. NQ is the sixth sister, it's following behind. Right? So I had that whole setup lined out, waited for the retrace, got the retrace. Look at the timestamp, 10:15. Okay? You can see it's falling behind. So US 500 or ES was leading prices lower in this case. And by the way, US 30 was following suit with that. It was following suit with that. And it was tanking really heavy too. It was tanking very, very heavily. It tanked really heavy and then just sat inside of a consolidation after it did so. Okay? So that's what I saw. That was what I was looking for. Beforehand, it was all lined out. I was just waiting for it to come back. As soon as it came back, it traded. It kind of tapped. It kind of tapped into it. On this candle, it tapped into it, and then it kind of wanted to start going lower. So it kind of tapped it in this one, and then at first, it looked like it was gonna tank. So I snagged an entry. It started kind of going down lower. And then I said, okay, I don't really feel too fond about this. I want to really see it get out of here. So what I did was I ended up just taking it off. Okay, I took it off in a profit. And it was about almost shy of five handles. Shy of 5 handles in the move. From the entry, closed it, booked it. I was done with it. Beautiful setup. And after I took it, started moving back up. So it was kind of a situation where I took it and the stop was pretty much in this area. Okay, pretty much at this level. So I would have sat in some drawdown. And after that, I watched this thing play out. Okay, because I decided to book it early, so I was watching to see how it was going to play out in the end. Yes, it traded above this, but it traded into the order block. You look at that level right there. See that? Tapped it. Tapped into it. Came back down. Closed below. So if I didn't take that first entry and I said, okay, hold on, I'm going to wait and see what it does, then this would be where I would take that second entry. Or not the second entry, but this would be where I would then take my entry. As soon as we start rallying lower, okay, as soon as we start rallying lower, I would grab my entry as it starts trading below 50% below the open. That's where I would take an entry at. And in the next candle, rallies right down. Okay, done deal. That would be what I would be looking for, and it panned out. And it continued rallying on lower. Price really, really moved. As you can see, there 1%. So it really, really moved. It was looking to get somewhere. Really looking to get somewhere. So nice big candles. In the initial, I guess I could say entry that I took, I liked the reaction that I got at the level, watching price live as it tapped into it. And then I thought to myself, okay, it's tapping into it. It tapped this low. It tapped the low, and I said, okay, it tapped the low, but I want to see it kind of push a little bit deeper into it than that. And then it pushed into it a little bit deeper. And that's when it pulled back, gave that reaction, and I took an entry off of that. Now, I was happy seeing that. That's what I want to see. So I executed on that. All right. So there's the screenshot that I took after I closed it. Now, if you look at this, there's the breaker block. All right, there's the breaker block. I tapped into it, really nice. Okay, it started going below, so I took my entry. And it rallied down to here. But it didn't give me, how could I say, that I want to get out of here reaction that I want to see. It didn't give that to me. So I closed it. Okay? So that's why I said if I stuck to this entry, okay, stop would have been up here. That would have been fine. Take profits down there. That's good. Okay, if I held on to this and we traded up into this wick, traded up into the body, it would have traded up into there. So that still leaves more than enough room for wiggle room for the trade to pan out. Do what it needs to do. And then it rolled over. And it did what it needed to do. And I got a screenshot of that too. Let me pull that up on the screen. Let me get it here. Okay, let me pull this up. So right there, okay, see, this is how it ended up playing out. We ended up trading higher. It tapped the order block. Okay, so ample room for the trade to pan out and do what it needs to do. Okay? Rolled over. Now this is the reaction that I'm looking for. Okay, when I enter, I want to see it. It needs to show me that it wants to rally. It wants to get out of there. That's what I want to see. Didn't see it in the previous candle. We just traded down to that, and then it started reversing. Okay? This is what I want to see. I want to see that candle push lower, and I want to see it close lower. And then I want to see follow through in the next candle, where it really wants to reach down and work its way towards lower prices. And you can see there, that's where it would have got the TP. So that's the framework behind it. Using the model from Kyle, Jade Cap. Okay, there you go. There it is. That was it. So beautiful move. Panda ended up rallying past that, even lower. Okay. So it was quite a while. It was quite a while back that I took a trade. There was one or two last month that we kind of got the setup, but we kind of got, it just didn't present the cleanest way for me. And then I think there was one where I was like, should I take it or should I not take it? And then I just left it, and that one ran too. So yesterday I sat down, saw this model presented, couldn't miss it, and I took that one. So that's pretty much it for as far as that. If you guys are not yet familiar with Vantage, they are a Forex broker. You can trade anything from euro dollar, pound dollar, to gold, to US 100, US 500. Platforms they support or MT5, MT4, TradingView. They have an app, and they got a web trader. So they are versatile, as you can see over here. MT5, MT4, web trader, an app. So they have a versatile approach as far as platforms, what you can trade on, and a couple of things. Let's go ahead and take a look at the markets. Here you go. There's the markets that they offer. Forex, indices, energy, shares, CFDs, precious metals, soft commodities, ETFs, and bonds. Okay. Here are some of the account options here. As you can see, they have a minimum deposit of $50, which is not a lot of money. Now, take a look at some of the pairs. Here you go. These are some of the pairs with the spread. There you go, euro dollar, indices, S&P 500. Okay. If you're not familiar with them, check them out. So with that said, if you're looking for an opportunity to make some money on the side, whether you're going to use it for spending, save it up, whatever it might be, the channel has been approached and we have a signal group that we're running on gold. And if you join through the link that's in the description, okay, if you go and you follow that Telegram group and you sign up to Vantage, okay, through the Telegram channel, through the link that they gave us, then you get access to that gold signal group for free. Okay. Don't have to pay for it. Don't have to use it. But you get access to it if you sign up through the group, through the link that they provide. So if you're looking for a broker, take a look at Vantage. Sign up through Vantage. They do also at times run a promotion. If you deposit, then they will give you a deposit bonus on top of what you deposit. So that gives you a bit more money in the account that you can trade with. So check them out. And the link will be in the description, as well as on the Telegram and the as well as on X. So check them out.